Hi everyone, I'm Loaded Forex, aka No Signal, No Entry. Are you ready to learn how to start day trading this year? In this step-by-step video, I will break down everything Forex beginners need to know to get started in the world of day trading. Whether you're an unprofitable trader struggling to stay consistent for a long time, this video will help you on your journey to becoming a profitable trader, and I will also cover essential topics like how to run a top-down market analysis from daily time frame to 4 hour to 1 hour to 30-minute time frames, and also how to manage your risk and capital. In this video, you will also learn how to execute this day trading strategy, how to exit, and how to manage your risk while trade is running in your favor, how to cut your loss whenever trade is going against you. If you have been searching for videos on how to trade Forex or how to day trading, this video is made for you. If that sounds good, make sure you click on the like, subscribe, and turn on the notification button, and I will see you after the intro. As a day trader, your top-down market analysis should start from daily time frame, right? And you must have a trading journal where you write down all your trading truths in the market. Your day-to-day trading analysis, you have to write them down inside your journal. If you look at the chart of USD JPY on daily time frame, you will agree with me that the overall direction is bullish. Buyers has been the one in charge of the market for a very long time. The trend started from this zone, and the buyers took charge of the market for a very long time. And what are you supposed to do as a professional day trader is to keep on looking for more buy opportunity than sell setup. For you to recognize a valid uptrend market, you must see the fixture of high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, equal high, higher low, higher high, higher low, higher high, higher low, higher high in the market. You must be able to recognize these features that represent the pattern of bullish market condition or uptrending market condition. You have to see a pattern like this moving in an expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion to the upper side. We have our higher low feature here where we have a swing higher low features around this zone. Then we have our higher high fixture around this zone. You have to exercise a lot of patience and wait for price action to invalidate the current higher high to create a new higher high. Since price action already invalidate this higher high, this zone is no longer the recent higher high, so we now have our recent higher high around this zone. Now, where is our last higher low? We have our last higher low around this zone here. Then we have to exercise a lot of patience and wait for price action to give us a retracement phase, right? From this higher high, we need to wait for sellers to push the price action to the downside and create a new higher low for us on the daily time frame to consider this zone as the new higher low. And whenever you are trading a bullish market condition, your last higher low here must be protected. Price must not trade below the last higher low. When the buyer started rejoining from this zone after this short-term retracement phase, the buyers took charge of the market to the upper side and they invalidated the last higher high around this zone here to make this point here as our last higher high. The sellers came in again and took charge of the market to give us a retracement phase to form a new higher low around this zone. So this place is no longer our recent higher low. Now we have our latest higher low around this zone. Now we have our new higher low around this place here. Then the price action started the journey from this higher low. They pulled the price action to create equal high around this zone because the buyers couldn't invalidate this higher high. So it created equal high. Then the sellers took charge of the market from this zone. They sold temporarily to the downside to create a new higher low. Then the buyers bought the price action. Then they finally invalidated the last higher high around this zone here. So we're now having the latest higher high around this zone here. Then we have the recent higher low around this place. So the price action invalidated this one as well. This way will become our recent higher high, while this place will become our recent higher low. Now the price action started the journey from here. They invalidated this last higher high, so which made this place to become the recent higher high, while this zone is still our recent higher low. If the price action is still trading within this range, this recent higher low and higher high, price can still continue the bullish trend, right? But in a situation whereby the price action trade below the last higher low here, the trend is no longer bullish anymore. So we are now back to bearish market condition. That shows that the sellers are now the one in charge of the market. The next step is to figure out your area of interest. What do I mean by area of interest? Area of interest means the zone or the area where you are interested to take opportunity in the market. That means if you are in a bullish market condition, you should be looking hard for area of interest or zone to take buy opportunities in the market. Right now, when the price action started the journey from this zone here, where is the recent key level zone for possible buy opportunity? You have to establish zones with multiple touches where price actions has reacted more than 3 times. You need a minimum of 3 touches to consider a zone as a valid zone for point of interest to take buy opportunity in a bullish market condition. Looking at the daily chart of USD JPY right now, you can consider this zone as a key zone for possible buy opportunity. Why? Because the price action reacted around this zone multiple times. You need a minimum of 3 times for you to consider your area of interest as a valid zone for buy opportunity. You have to extend the rectangle to the historical data to check how many times price reacted around this zone in the past. Price reacted here, price reacted here, price reacted here. You need a minimum of 3 touches. Now this is the 4th time, this is the 5th time. Now what happened when price action came back again in the future? Price sold down, retested this support key level zone, then price bought. Now when price action bought, where is now the recent key zone? Price retested this support key level zone here, and if you take it back to the historical data to confirm how many times price reacted around this zone, price reacted here, price also reacted around this zone here, price reacted here, that's 3 touches, price reacted here, we have 4 touches, price reacted here. If price comes back in the future, what happened? Price will retest this zone here and will look out for possible buy opportunities to the upper side. So let's watch out the next opportunity. Before we can consider this support zone as area of interest, we have to check the historical data, how many times price reacted at this support level. Price reacted here, price reacted here. We can spot minimum of 3 touches already. We have the 4th touch around this zone here. If price action comes back again in the future to retest this key zone, there's high probability that price might buy or price might break this zone. Since we are staying in a bullish market condition, our major focus should be on buy sentiment alone. When price action retested this support zone, buyers took charge of the market and they bought to the upper side. So price created a new higher high around this zone here. So where is now the recent support key zone? This place happens to be the recent support key zone. So for us to consider this as recent support key zone, we need to check the historical data, how many times price reacted around this zone. Price reacted here, price reacted here, price reacted here, then price reacted here multiple times. So we have more than 4 touches already. We have to consider this support zone as our area of interest for possible buy opportunity. When price created a new higher high, price retested it, then price bought to the upper side. So the next example, price created a new higher high around this zone here. So this place is going to serve as our area of interest. Before we consider it to be our area of interest, we have to check historical data, how many times price reacted around this zone. Price reacted here, price reacted here, price reacted here, price reacted here. So when price action came back again, price retested to create a new higher low here, then price bought again. So let's check another beautiful example. Price action retested this zone again as our support key zone, right? So we are considering this zone as our area of interest for possible buy opportunity. Before we do that, we have to also check the historical data, how many times price reacted at this zone in the past. Price reacted here, price reacted here, price reacted here, price reacted here, price also reacted around this zone here. So if price action comes back again in the future to retest this zone here, we should be looking hard for buy opportunity. Before we proceed to the next phase where I will be showing you guys how to execute this day trading strategy, please click on the like, subscribe and turn on the notification button so that YouTube can recommend this video to other traders as well. And if you are interested to join our free signal community on Telegram, click on the link below this video description. Let's dive into the market. Looking at the daily time frame of GBP/USD right now, you realize that the buyers are the one in charge of the market. Why? Because we can recognize the features of bullish market condition: higher high, higher low, higher high, higher low, then higher high. And before we can establish our area of interest, we have to mark the recent key zone with the most touches, right? We have this zone as our point of interest, right? And we're going to extend this rectangle to the historical data to check how many times price reacted around this zone. Price reacted here, price reacted here, price reacted here, then price also reacted here. So the next step is to scale down to our entry time frame. As you all know, we use 1 hour time frame, sometimes 30 minutes, sometimes 15 minutes time frame. But in this video, I'm going to use 1 hour time frame for our execution. Looking at the structure on the 1 hour time frame, you can see price action started the retracement phase from this zone here to create higher low. Then price expanded again to create a new swing higher high by invalidating the last swing higher high around this zone. So what is going to be the next phase after expansion phase? We have to wait for a retracement phase to our area of interest. At this junction as a trader, all you need is patience. If you want to become a profitable trader, you have to develop patience, skill in the market, to wait for days, to wait for hours for your market analysis to play out. Don't come to market to take random trades. Come to the market to look for opportunity by following your trading plan. So let's play the candlestick right now and exercise a lot of patience for price to mitigate our point of interest. Now price action is already at our point of interest. As you all know, there are confluences we use before we come to conclusion that price is going to buy at our point of interest. Number one, we want to see volume reduction, and you can see volume reduction at our point of interest. Then the next one, we need weak rejection. We can see presence of weak rejection around this zone. We have weak rejection, weak rejection, weak rejection. So the next step is to exercise another patience and wait for price to change the structure back to bullish. Now the structure on 1 hour time frame shows that the sellers are the one in charge. Price created this lower low, lower high, lower low, lower high. So we want the structure to change back to bullish structure so that we can take buy opportunity in alignment with the sentiment on the daily time frame. So let's play the candlestick. Look at what the price action is doing now. We need price action to break the last lower high to the upper side. So this place serves as our last lower high because this zone was the last lower high, but now price action invalidated the last lower low around this zone here. So this place is going to be our latest or recent lower low, while this place is our recent lower high. We need to exercise a lot of patience and wait for candlestick that represent buyers to close above this lower high here. Now you can see the momentum of candlestick that broke the structure to the upper side. It was a healthy bullish candlestick momentum, and this candlestick speaks a lot of volume that buyers are fully in charge of the market right now. So as a day trader, execute without hesitation. Place your stop loss below here, then target twice of your risk to reward. Let's play the candlestick and see what the price action will offer us on this trade. Now price action is moving towards our take profit level. Let's see what the price will do at the end of the day. Now price is retracing again back to our entry zone. Don't panic, the structure is still bullish, right? The overall structure is still bullish, so we have to exercise a lot of patience and wait for price to hit our TP before we opt out of the trade. Finally, price action smashed our TP level, and if you look at the overall swing structure on 1 hour time frame, price action created this swing higher high, swing higher low, swing higher high, swing higher low, swing higher high, swing higher low, then higher high. So we are still in a bullish market condition. If you are blessed in one way or the other through this day trading strategy I just reviewed in this video, don't forget to click on the like, subscribe, and turn on the notification button so that you can get notification whenever we upload another exclusive video content like this. And if you are interested to join our free signal on Telegram, you can click the link below this video description, and I will see you next time, guys.